What's going on, guys? This is your boy Trillionaire Mac and welcome back to another video. So in this video we're going to be breaking down a EURUSD day trade that took place last week. Okay, not only was I able to catch this, but of course you guys know my students were able to catch this as well. Now this trade was based on H1 time frame. Okay, we are going to look at maybe the H4, maybe the H2, work our way down to the H1, M15, then the entry time frame that I chose for this trade, which was the M7. Alright, so slightly different than what you guys are used to. Nevertheless, alright, you guys should be able to gain some knowledge from this video, backtest it, throw it on your charts, things like that. Alright, with that being said, sit back, relax, and let's get into it. Now, before we continue, if you're not subscribed to this YouTube channel, feel free to click that subscribe button. A lot of good content on this YouTube channel, and really there have been a lot of testimonials from you guys who watch these videos who are able to apply this to your charts, backtest with the theories that are talked about within this YouTube channel, and start to understand the market a little more. Now, for those of you who have a piece or a segment, okay, that you feel is missing, that is what my mentorship, that is what the masterclass is for, and that is what the course is for as well. Now, if any of you guys have any further questions, feel free to contact me on Telegram. Guys, if I don't respond to you all within 24 to 48 hours, feel free to contact me once more, okay? We get a lot of Instagram DMs, a lot of messages, a lot of emails, a lot of Telegram messages, all right? So it's kind of difficult for us to go through everything, all right? So if you're someone who wants to contact me, feel free to do it. Once again, I will be trying to go through all 200 of my Telegram messages today, okay? And I think we have like over 400 emails or something like that. So we have a total of over 600 individuals that we're trying to get back to as soon as possible, get you guys signed up within the mentorship program, get you guys started within the course so we can move forward, all right? So with that being said, let's get right into the breakdown, of course, starting out with the H1 time frame. So before we actually start on the H1 time frame, let's actually bump this up to the H4. So as you guys can see, we have this nice push to the upside. Price interacts with our supply here, okay, previous supply that we were able to catch a trade from with this slight push to the downside. Wasn't bad at all. All right, and then we can see that demand came into the market within this area here and then caused price to push to the upside to run into this demand zone, right, or supply zone, excuse me, right over here. So we have demand that overpowered this supply in order to push price into this supply here, okay? From there, all right, price, of course, gave us a trade here for this move to the downside. We caught a buy position here for this nice move to the upside. We were looking for possible sells here. We were able to catch a sell here, but that's not what we're going to talk about. This sell that we caught here, okay, it actually missed my trade by literally 1.2 pips. I posted it on my Instagram story, and as you guys can see, we have completely smashed target, but we're not going to talk about that on this video. That's going to be the next breakdown. All right, what we're going to talk about is this buy to the upside here. So we can see that this was the demand responsible, or the demand that came into the market in order to push price to the upside to run into this here. The demand that came into the market within this region caused all of this inefficient pricing all the way to the upside, right? We see nice inefficient pricing, right? As you guys know, price wants to stay balanced, okay? So whenever you guys see inefficient pricing, that is something that I want you all to pay attention to. Let's actually delete this. I'm not sure why it's there. There we go. All right, so now let's go ahead and move down to the H1, talk about the nitty-gritty of things. So this was our H4 zone based on the higher time frame. We could have actually refined this to the H1 to this candle here, which could have been completely fine based on how I like to have my refinements, okay? And we can see based on the H1 time frame, right, as price comes back into this area, we're leading off with a high, a low, lower high, lower low, lower high, right? On the lower time frame, okay, this was a lower low. On the H1 time frame, however, we're not going to necessarily count this as a lower low. We're not going to count it until we see a full candlestick body closure, which is here. So this was our lower low here, okay? And then based on the lower time frame, which we're going to go down to, we have a change of momentum on that lower time frame once we tap into this zone right here, okay? So on the H1, okay, you can't really see it unless you're a student of mine, all right, or maybe you can, right, who knows, but this right here would be our breakup structure with that full candlestick body closure there, and then our nice break back to the upside on the H1 time frame would be here, right? So now that we have this nice break here, okay, I am anticipating us to possibly get a trade to the buy side, okay, if price wants to come through. We could possibly get a buy position to take advantage of earlier next week once the market opens, okay? But we're not going to talk about that right now. Right now we're going to discuss this trade here. Let's actually get rid of some of this here. There we go. Perfect. All right. So let's go down to the M15 and let's look to see what price is doing. So as we can see, based on the M15 time frame, right, we create this lower high here. We have this as our M15 breakup structure to the downside with the full candlestick body closure. Price creates this lower high, then we create another lower low, and then price starts to move to the upside. Now, within this area here, we can see that we have some type of consolidation where price essentially halts just a little bit. We have a little bit of sideways action before we see that nice push to the upside, right? We also know that we have an inside bar here after or before price actually pushes to the downside to give us another breakup structure to the downside, which is used as our sweep of liquidity and our previous mitigation to the left over here. Right, and then price starts to make its way to the upside. So our structure points would look something like this. And then price pushes up to create this high here. Right, these are our structure points. So we create a lower low, and then we create a higher high right after. Our job is to figure out what was responsible for creating that higher high. Now we know there is some type of demand that is responsible for creating that higher high, okay, which is what we want to focus in on. There we go. All right, so we can see that price pushes to the upside here. Okay, we interact with this supply here, then price continues to push to the upside. So there is some type of demand that came into the market here in order to fail this supply here. All right, anytime price interacts with the supply, we're then supposed to break demand. Anytime price interacts with demand, we're then supposed to break supply. So seeing that supply is in control with this nice push to the downside, and seeing that price is trending to the downside with market structure, all right, when we see a lower high, lower low, when price trades into the supply that was responsible for that lower low, we're then supposed to break demand. Okay, that would continue our supply chain that is responsible for this retracement, depending on how you're looking at it, to the downside. Now that we are trending back to the upside, okay, we know that this is a valid level of supply here because price interacts with it here and then pushes. So if we go down to the M7 time frame, where I took my entry, okay, simply just refine this on the M7. It's just based on preference. You could have gone down to the M5 if you really felt comfortable, if you really felt the need to do so. And this is where I took my entry. Let's actually move this out of the way for now. It's based on another trade. We can see that this candle here, okay, is the candle that pushes price to the downside, but this is the last sell before the buy takes place, right, as you guys can see. Right, so this was my entire refinement here. Okay, because we have this wick that sticks a little bit above, let's count that. As you guys can see, that's where I actually took my entry. Okay, just keeping that in mind, right? Because we can see that this is a nice wick. We reject, okay, but overall this is reaching. So this is wanting price to push to the upside. Now, if you guys want to know the difference between a candlestick that is rejecting or within this case, reaching, okay, feel free to contact me. I don't mind asking that question, but I'm only going to answer it for the first 5 individuals that actually ask. All right. So we can see that price taps into the demand that was responsible for failing this supply here, and seeing price have a nice push to the upside, right? So now, as price pushes to the downside, okay, that's where we took our entry. The risk on this trade was very, very simple, okay, just a simple 4 pips, okay? And then we see that price starts to move to the upside. Now, I do get a question a lot about, Mac, do you take entries around spread times? And I'm going to be honest with you guys. I usually do not take entries around spread times unless it's, for example, on a Sunday where the market has just opened and I want to get into the market, okay? Any other time I do take trades around spread times, it's for a specific reason. Okay, it doesn't happen often, and usually I only trade London session or New York session. As you guys can see, this trade triggered at about 2:55 a.m. Okay, so you know, London session and New York session is going to be your best bet, especially for a pair like Euro USD. All right. Now, my first target where I took 80% off the or 60%, excuse me, 60% off the table, okay, was around here, around 9.05%. Okay, I left 39% running. okay, and simply just targeted this region right here. Now, I was already happy with this return here, to be honest with you guys. A 9.05% trade within a few hours is not bad whatsoever. And remember, this was also based on a London session move, right? So if we, let's go ahead and put our session times on here really quickly. Entry was literally about 5 minutes before London started, around 2:55 a.m. All right, I normally hop on the charts around 2 o'clock a.m. in preparation for London session. Okay, London session starts around 3 a.m. Eastern Standard Time, and then we can see that we have a nice push to the upside with price. Okay, so pretty much within that session, all right, already collected 9.05%. That is 90.5% of an FTMO account challenge passed within, let's see how long that took us. We do this like clockwork. This is absolutely amazing. Within 49 minutes. Can you guys believe that? 49 minutes equated to 90% of an FTMO account challenge passed for any type of student who wants to become funded, right? So after that, okay, targets were simply based on the higher time frame. Let's go back to the M15. So based on the M15 time frame, we do have this supply here. This supply here was responsible for breaking structure to the downside here, okay, which is something that you guys want to pay attention to. Now, for those of you who need a checklist on what you're supposed to look for in order to have a valid supply zone, a valid demand zone, a valid break of structure, a valid trade in general, for those of you who need a checklist, okay, the mentorship program is going to be for you. Okay, not only do you get 25% off of the institutional trading course, but you also get my one-on-one time. You also get access to my webinars. You also get access to my live webinars that take place throughout the week, as well as one-on-one sessions, which is key. Now, for those of you who want longer than the free 30-minute one-on-one sessions that are included within your mentorship program, you guys can also sign up for my hour-long sessions that take place on the weekends if you need a little bit more assistance. All right. So we can see my target was here. Okay, when I am trading counter trend, usually you guys will see me just target supply and demand zones and not necessarily highs and lows. Okay, and there's a methodology behind the madness. So students of mine, you guys should understand when you should target swing highs, swing lows, or just highs and lows in general, or when you should target supply and demand regions. All right, there's a difference, and because of that difference, that's why you guys saw me target 9% at this zone here, and of course 20% at this zone here. So on this trade we risked about 4 pips for around 81.4 pips. Overall, risking 1% of our account for about 20.35% return on investment, right? Once you think like that, then it becomes very, very easy to make money within the foreign exchange market, all right? So this was just a quick breakdown. I want you guys to go ahead and backtest this on your own, all right? See what you would have done, go down to the nitty gritty and look for these types of things to take place. Now, for those of you who do need a strategy, for those of you who need guidance, all right, it's really all about mentorship. If someone knows how to do something, okay, I'm going to put myself under their wing if I want to learn how to do what they're doing. All right, that's really what it's all about. And for those of you who need a little bit more assistance, that is why I am here. So with that being said, if you guys enjoyed this, feel free to leave a like on the video. It definitely helps out with the algorithm. If you guys have any questions at all, feel free to drop them down in the comments below. I know the uploading schedule has been a little different. We're trying to finish up a couple of projects for you guys before we move forward with the new educational content and the new YouTube live streaming. With that being said, I'll catch you guys on the next one. Much love. Peace out.